In this video, I'm going to talk about how to account for bundled services, which are also known as multi-element transactions. And this is basically something that happens when you have a software company and they sell a package deal that has, let's say, installation of software, some later upgrades, customer support. There might even be some training of employees or so forth. So you've got these different elements, right, of this bundle that are being sold together. This is being sold as a package. And let's just say that in our example here, let's say that there's Suzy Software Company, Suzy Software, and they sell these elements right here for a package deal of $50,000, right? So that's the package price. Now the question is, how is Suzy going to, or Suzy Software going to recognize this $50,000? Do they recognize it all immediately, or what percent deals with upgrades, what has to do with customer support, etc. And so what we're going to do to figure this out is we're going to take the fair value of each element if sold separately. So if Suzy sold the software just by itself, what would be the fair value of that software? Now, Suzy's might not be able to estimate that, right? The easiest way is if Suzy just has a price list and Suzy just says, for example, let's just say that the software goes for $70,000 if sold separately. The upgrades go for $20,000, and the customer support would be $10,000. In such a case, then you just say, okay, well, we've got this price list already. We know that if these things are sold separately, here are the prices. But if you don't have that, then basically Suzy Software is going to have to make some kind of estimates, right? The managers are going to have to estimate what the fair value, what the selling price would be if these were sold separately. And you might see this VSOE, which stands for Vendor Specific Objective Evidence. So this vendor specific objective evidence basically is a way of saying, look, this evidence, or however Suzy decides to come up with the fair values of these different elements here, it shouldn't just be pulling a number out of a hat. There should be some kind of objective evidence, as I said, like a price list, but it might be something else. There's some kind of some reason to base Suzy's estimates, right? So you just don't pull the number out of thin air. But let's just say that there's a price list and we come up with these prices, right? So we've got software 70 grand, upgrades are 20 grand, and customer support is 10,000. So now what we can do is we can calculate percentages. All right, because if we were to sum all this together, these fair values together, we'd have $100,000. The total estimated, this is like the total fair values if we added them all together, sold separately. Okay, so now we could say, well, the software, the 70,000, is really 70,000 divided by 100,000. That's 70%. So we'd say the software is 70% of this package, and then the upgrades, 20,000 divided by 100,000, now we're talking 20%. And then the customer support, 10,000 divided by 100,000 is 10%. And so we could look at this and say, well, look, let's just apply these percentages here to the package price, right, to that package deal. So we'll go ahead and we'll say, okay, 70,000, and then we multiply it by 50,000, right? So 70,000 times 50,000 is going to give us 35,000. And then the 20%, if we take 20% times the 50,000 package price, that will give us 20%, that'll be 10,000. And then if we take 10% of the package price of 50,000, 10% times 50,000 will give us 5,000. So now these numbers, just to check and make sure you did it right, you can just total them together. 35 plus 10 plus 5 equals 50. So we've got 50,000. That number, this number right here, better be the same as this number, right? Because you're trying to allocate the package price, the price of this package deal. So the numbers have to equal. Now what we've learned here is the following. That we're going to recognize 35,000 of this 50 for the package deal after the software has been installed. When this element right here has been taken care of, when that's been delivered, when we install the software, we'll recognize the first 35,000 of the total 50. right? Now, there's 15 still to be allocated, right? Now, when the upgrades are installed, right? Whenever the upgrades are installed, then at that point, you'll recognize the next 10,000. That's when Susie's software, they'll make a journal entry to recognize 10,000 of revenue, right? And then the customer support, so let's say that it's a 2-year agreement to do customer support. So they say for the next 2 years, you have any problems, we'll give you customer support. Now so because it's a 2-year agreement, you'll allocate it over those 2 years. But how much do you allocate? Well, it's that 5,000 that we calculated, or you can think of it as 2,500 a year. So at the end of year 1, they recognize 2,500. At the end of year 2, they recognize 2,500, and then they basically allocated $5,000 to the customer support. And so by the time that they have delivered the software, done the upgrades, and done the customer support, they've basically over time been recognizing slowly this package price. So by the end of the deal, they'll have recognized $50,000